So, hello investors. From surprise central bank move to a billionaire blowup. This week had it all. Stocks extended gains despite rising volatility around tariff, tech earnings, and political infighting. The bulls stay in control for now, pushing the S&P back to test the 6,000 level, but risks are simmering under the surface. Let's break down the action and what it means for your portfolio. So, market overview, we had tariff, central banks, and billionaire beef. And Trump is a billionaire now, so that's why we were saying billionaire beef. This week started on shaky grounds after President Trump announced new tariff on U.S. imports of steel and aluminum, knocking stocks, bonds, and oil lower. But aluminum and steel stocks went up a lot, particularly X and I think CLF and Cliff. So global focus was also at play. OPEC's left July productions plan unchanged, where they're increasing the oil output, but Saudi Arabia reportedly wanted even more supersize increase to capture market shares. The ECB, European Central Banks, cut rates again, signaling that it's near the end of its easing cycle and that inflation is coming under control. Meanwhile, India's central bank slashed rates more than expected to simulate growth because they're trying to make it easier to borrow money and grow more. While US yields fell midweek after disappointing ADP employment data and ISM data, but bounced back on Friday stronger than expected with the May job reports. So very, very interesting stuff there and some revisions as well. I think we had the ADP report, what was it, like only 40,000 jobs gained, as opposed to like 100 expected, which was huge difference, you know? It's just showing that the job market is not hiring as much as like expected to be. Significantly less, like four times less hiring, and even part-time as well. We have VIX fell below 18, 10-year treasury yields near 4.5% still, which is pretty high. The dollar found a little bit of support and move up a little bit. And then we had trade talks and political turbulence. Trump and the Chinese president spoke. They said there's, potential for them to meet this week and talk more. There's potentially of the US three guys going over there to talk deals in London or in China. They're debating it out, so still interesting dynamic playing out. But a lot of the spotlight shifted when they tried to pass the big tax bill, and Elon Musk went on Twitter and he got mad about it. He said, this bill is a load of crap and it's filled with a lot of pig oil in there or whatever. And then and then he got mad at Trump, and then he was like, shame on all those people trying to pass these bills. And then Trump came out and got mad at him. Trump was like, I'm gonna throw that red Tesla that you gave me away, whatever. Everybody is pissed. It's interesting how that plays out. They said they were supposed to talk over it on Friday, and then they didn't.
Mm.
And Tesla stock dropped a lot. People were expecting Tesla to lose a lot of money over this. And Elon is definitely losing a lot of money, so he's even more pissed. And I don't think it's over yet. I think this could keep going, and this is definitely a lot of uncertainty in the market. And market does not like uncertainty. When there's a lot of uncertainty in the market, they tend to sell off. So that's what mostly happened this week. And then looking forward to next week is the trade talks, CPI, PPI reports. That will kind of guide where, rates are going as well. But Trump also he also yelled at Jerome Powell this week publicly, and he was like, hey, you should cut the rates by one full percentage, which is a little while. But I don't know. I don't know what the response is going to be. I don't know what the report is going to be. So it'll be dependent on the report. And I think the Trump and Elon situation will continue to blow up more. And then we're also finished in the week off with a few more earnings, and this will probably be the end of the earnings season after this. So that's what's happening in the market. And then in terms of market forecast on my side, um, we are getting a little bit toppy on the RSI side, and we did see a little bit of crossover, but I wouldn't fully be short unless we hit 6120, unless we hit the super resistance here. then I could consider it to be more bearish. Are you guys able to see the stock chart screen by sharing that? Yeah.
Yeah.
Yeah, I can see.
Yeah, so it wouldn't be fully bearish until we hit that line there. The dollar index is starting to bounce a little bit, and but it'll really depending on what the uncertainty situation goes like. If we remain more uncertain, the dollar could lose weakness as well, because that's uncertainty in the US overall.